Now, importantly, we identified the magenta quite early on in the day. So this was quite straightforward, especially once you saw the magenta retests. You had your confirmation early algorithms that magenta could be controlling the range here. So once we broke out initially from that magenta, and you see how that orange and magenta started building liquidity here, forming that nested right shoulder, you could have been ready for this trade here. Now we managed to take a trade, especially from the top, because of a zombie trade here on the breakout. Now this would have been quite small profits as I made in the morning. Now my only concern, as I was mentioning quite frequently in the morning, was the lack of the selling continuation, or in this case the selling precision algorithm. You see that the sellers are not truly selling. You don't see them selling. You don't see them break out of range. You don't see them break out of the algorithms with a sustained precision algorithm. And this is concerning. This is why I mentioned if you want to see more volume introduced, you see the volume just descending right here. You want to see it trigger more volume at certain levels, in this case inverse cups, and that's when you may see, especially if we do form inverse cups, stronger precision algorithm that I can base my stops on. Now you must always remember that selling is always faster than buying in most cases, because they're offloading certain positions. So if it's not going down fast enough, especially if you're taking puts, you don't truly want it. You want to escape your position as soon as you can. So at this point here, you do see that it's actually the pink algorithm that's building liquidity here. We do see an engulfing candle. Engulfing candles are always very good clues, especially near the algorithmic lines here. And you see how we had that breakout here. Now, my early concern was breakout with that magenta algorithm. So once we had that orange breaking out, this was a pretty good trade here. Now, if I were to take this trade, I would have taken it where that yellow 644 is. I knew there was a certain problem here, and I would have taken the trade right there if I could, following the orange algorithm, probably take some calls here, protect it by then, and allow it to go up to close the gap at that 645.3, which we didn't. So this was pretty dangerous too, especially once we started having some tapering at the top, but still a pretty good trade. Half a point, yeah, that's not too bad from following up from this move with that continuation structure. So remember what I talked about, that continuation structure. You have to understand the magenta and the orange. Now I talked about this in the analysis, so you have to review, understand what it means with that buying continuation. And to be honest, you can just skip this morning altogether, because you see the larger move came later with the blue algorithm, isn't it? So you can practice this. You can make some pocket change here if you want. There's still moves, there's still profits to be found. And most importantly, it's important you understand this blue algorithm here. Now, you will notice something about this blue algorithm, right? It's very clear liquidity here. And you will notice something about my trade. I left my trade open all the way to the end here. And I want to explain why. This is particular comment that I made. Remember about that 6,455.7 where SPX was. Quite important, right? So you notice I opened the trade here. 6,455 puts, I think. Now this is important, because as we approach late in the day, between after 2 p.m. near to power hour, and you see the blue algorithm building liquidity. Now this is quite important, because earlier on we were building liquidity in that yellow. So there is a possibility that the bulls are building this to push it back up, and we started to retest the blue. Now retesting the blue comes in several stages. Now you have to remember this. Firstly, breaking down the pink of that blue. And then when we retraced again, you notice the blue is back in control, isn't it? And we started pushing down here. Now, this was when I opened my puts. Now, you have to understand near end of day how to be managing your strikes, because for 0 day to expiry, it can become completely worthless. You have to be very careful. Now, 6455p equivalent in SPY is this level here, which is important. That's where the blue algorithm is. So if I see that this continues to head down, and I see the structure that it continues to head down, all I got to do is to set my alerts. In this case, I didn't set alerts. I just set my price target. So in this case, I set a price target at 100%. I set a price target at 300%. And by then, I know that I would have already been in the money. So the rest of my contracts, I could have just left it open. I went to rest here, if you remember. So I opened a trade here from earlier profits. You see how to chain up your play? Open up a trade here with your earlier profits because you saw the blue algorithm starting to go down. You know where the contract will always have value, because if we trade beneath this liquidity level, I will always have value in my contract, and I have to protect it by that 100%, because once I protect it by here, now it's important, once I protect it by 100%, these are free. And I got my profits under 300 and remaining at 560%. It closed at 15.5, which is about 1.5 points from its strike price here. So you understand, using structure, using the strike price, you're able to manage your trade here even though you are not looking. Now, is this somewhat a gamble? Yeah. Of course, if you're not managing your risks actively, but with earlier profits, that's absolutely fine. And the contracts are so much cheaper here. So something that's close in the money because of this morning chop here is about, I think I opened it at 275. That's not expensive. And SPY, that's probably only 28 cents. So you understand how to be looking out and understanding the choice of your strikes, especially when paired with the overall trend of the structure and understanding how to be protecting your trades. Now, this is done without supervision. So if you have supervision over your trade, I think you will do even better. So quite straightforward here, isn't it? You see the yellow forming liquidity. And so a zombie trade could be in order here, especially once we started selling in that pink. We started grabbing that blue quite early on. So this was quite crucial, understanding this blue and understanding the dual algorithms, as I always mentioned. Remember this dual algorithms? Now I want you to take a look again. Magenta was in control here, isn't it? We rejected here, and then we start building liquidity by the blue. Do you see the dual algorithms? Now, I talked about this plenty of times, and I mentioned about the break of that yellow, which was quite important. You see the break of yellow, that's where the liquidity started pushing down, and that's where the break of the volume is, because we have triggered stops, especially near the end of day. So there are several clues here, isn't it? If you want to catch a trade, especially near end of day, dual algorithms, from the magenta to the blue, you see the controlled of the bears have strengthened from magenta to blue, especially with the structure on the breakout of that blue. And you had quite a guiding precision algorithm in that pink, which was what's guiding the selling throughout the break of the blue. And then one more avalanche of volume here once we broke out of that yellow support going down. In this case, you see a stronger selling. The selling precision we've been waiting throughout the entire day in green. So quite straightforward if you understand how to be planning this trade. And more importantly, you have to trade at your comfort level. Right, this trade was only possible for me only because I had earlier profits. So see, it's important. You need to know what you're doing. If you're trading early candles, as I always tell you, I trade early candles. I take as much profits as I can because these are meant to supplement my stop loss for a later trade. And you see how it supplements my stop loss, especially in later trades where your contract value becomes, well, I wouldn't say it's cheaper, but it's lower priced. And you have to choose a good strike. Because if I chose, for example, if I chose a 1 delta strike here, it would have ended worthless. And if I weren't paying attention on how to close it, yeah, right, it may spike up 100% in a particular candle, but if it doesn't get to here, it's completely worthless. And what is the possibility that for SPY that has chopped almost 1 to 1.5 points throughout the entire day for it to drop 2 points? So you see, you have to be realistic, as I always mentioned. And one way to understand that is using the algorithms, because if I charted out the pink from the break of that blue, now realistically speaking, right here from 4 p.m., how is it possible for me to retest, for example, 642? It's impossible, even with the pink algorithm that has been selling throughout the entire day. It doesn't get there. So you see, you use the algorithms, you understand the strength of the sellers at that particular point in the day, and you're able to chart, you're able to ascertain what strikes you have to prepare for. So this is an important lesson, especially from my trade here, understanding strikes, and more importantly, understanding the algorithms. Once again, a dual algorithm setup here, whether it's the larger one or the smaller microstructure. And a big part of this trade is this 30-minute chart, isn't it? So once again, if you are a newer trader, you have to look out for 30-minute moves, because once you see 30-minute moves, it's much better chance for you to see larger moves and to have time and the luxury of time to manage your risks and plan your trades ahead. So always be looking out for 30-minute moves, yeah. About this particular trade here with the pink algorithms. Now, you see quite clearly that the pink was building liquidity here. Now, even though the range was pretty tight. So at this point here, the difficulty will be in entering a trade, given that most of them are inside candles here. So even if you missed this earlier breakout, well, that's absolutely fine, because you will see how the pink was building more liquidity now. Now, there is always a case where there will be a stop hunt. So this is a very classic case of a stop hunt. And this is why I mentioned if you wanted to short this. Now, you don't see me telling you to take the trade off the magenta today, because there's the QQQ 20-day moving average, which I kept warning you about. And I mentioned this, and in fact I told you, wait for cups to close. QQQ will turn into some sort of resistance, and you will have a clearer trade then if the magenta continues to build liquidity. And so this is why the market picked up in volume, because as with every retest of major levels, and as I always tell you, you have to wait if the market is chopping right here. It's just chopping. Why particularly? Because we do not have the stronger orange, and we were just bounded by the magenta, as we already seen at the start of the day. So when it's just chopping, you need to wait for retest of major algorithms or major levels. And in this case, the break of magenta did bring in some volume. You notice that the large red candle here, and to retest the 20-day moving average for the Qs, and you see it coincided perfectly with the pink algorithm. Now, this was the time when I told you, you have to be looking out right for that pink algorithm inverse head and shoulder because of the engulfing candle. Now let's talk about that engulfing candle here. this was the engulfing candle I talked about, right? In an engulfing candle, it's a very simple premise. If they engulf the candle, it means that they don't agree with the price being that low. And this is clearly a stop hunt. So take a look at my entry, study my entry. You will see that the magenta played a very, very important part. Because once we engulfed and returned back to magenta, you notice there are many, many bottom wicks of that magenta. Let me just magnify it here. And you will see here with the magenta, several bottom wicks of that magenta. So I had a very clear entry here. Once I had my entry here, my stops will be when we break below the magenta. Now, thankfully, we didn't have to re-enter, so it was quite a straightforward trade. I would have charted orange here and allowed orange to be my precision algorithm to guide here. And thereafter, you see how it started grabbing that pink liquidity quite clearly here. Because we had another algorithm here, isn't it? With the pink. And this was the upper band. And you see how it started rejecting here. But it bounced off beautifully off that orange and pink. So this was a great re-entry onto the inverse headed shoulder of that pink algorithm. That was, if you zoomed it back out, building liquidity throughout the entire day here. So you see it for yourself how beautiful that trade is. And I charted this blue, so you knew that the upper limit, you knew where to protect your trades, because when you're trading 0 day to expiry, you have to take your profits quickly. You cannot assume it will break through a certain strike price here. Now, understanding this was very important trade because we waited throughout the entire day for this. So you need to know where to set your alerts here. Now, if you're shorting this, that's absolutely fine. It's a viable play too, isn't it? Because you knew where the magenta is. What you need to know is where is the selling continuation. And so when you see that selling starting to break back into magenta, you notice that too, isn't it? One big reason why returning back to magenta was such a great play, because it broke out of that selling algorithm as well. If this maintained in that green, that will be an excellent trade, right? Basing it off the magenta or even the teal right here. So another possible trade will be if we break out the teal and continue back down like that. So that's also a viable trade here. And this will give me some structure of that QQQ 20-day moving average as well. I will be looking out for structure here, especially with the magenta. So you see, looking out for that structure. So you have to know what setup is preferred. So you know what to be looking out for. And you just have to be very careful with trades like that. Now, early on, I took a short. I had about an 80% trade here with a short. I think it was here. Now, what I wanted to tell you then was that I saw this teal. If I wasn't mistaken, the teal algorithm was like that early in the day, and we started sprouting out here. Now, once we sprouted out of this, I was looking out for that buying continuation structure, which existed in that green. And this was at the point I saw the Qs dumping. So I saw the order books, and I saw Qs dumping. I saw liquidity going down. But we continued staying up for SPY, and we lacked buying continuation structure. So once we broke out of that green and we returned back to the teal, this was when I shorted it, because I saw this selling pressure and the Qs continuing down in SPY, and I got to trade here. So this was a early trade, and for early trades, you will realize the structure is quite thin. So it's a lot dependent on understanding some of the microstructure, and obviously, as I always remind you, taking less risks. I didn't trade my full contracts here, and usually for early candles, I will take 80%, sometimes even 100% of the profits when I protect the trade, because this is meant for me to pad my stops for later trade once the structure is more certain. I can risk taking riskier trades in the morning because I have a runway of 5 to 6 hours to take a trade. You have to understand that the market will give you trades. 1 to 3, that's on average from my experience, there will be 1 to 3 good trades. It is very unlikely that throughout the entire day, the market do not even give you one trade. So if you are able to take some risks in the morning, you scale down, and let's say this trade turns out red for me, I have 5 hours to consolidate. I have 5 hours to plan ahead. I have 5 hours with deeper structure, and this is probably half my size or less than half. And if I trade my usual size, as the day progresses, right, your RR increases as the day progresses for 0 day to expiry. That's how same day options work. And I have clearer structure. I can trade twice my size if I want to. My chances of recovering will be very high. So you see, this is all mathematics. You just have to understand your metrics, and that's what I always tell you. Once you trade enough, you have enough critical mass, you have enough data to start developing your own metrics. You will understand how you undertake risks, how you learn to manage risks. When do you trade best? When do you take more risk than usual? Where do you start increasing your contract sizes? And how do you protect your runners? How much do you protect your runners? And when do you add on to your runners based on the algorithms here? Now, these are all just structural constraints to help you guide your metrics. So you have to understand how to be looking out for your own metrics. And not all trades are created equal. You have to remember that. And it's quite straightforward, isn't it? Once you understand that, it's all about math. You just have to work out your metrics. And quite an uneventful day, isn't it? But even in very tight spots here, probably just 1.5 point chop. This was just a grind up, technically speaking, and this is important. We'll talk about that in the preparation video, not in the secret trading video. But as it grinds up magenta, there's still plenty of profits to be found in the charts, isn't it? Even 100% trade, as I showed you here. Today, right here. Now, right at the start of the day, you see we had that orange buying and that teal controlled selling right there. Now, this was when we identified the magenta quite easily. And you see that there was no threat on magenta as well. Now, at this point here, I think we retested the QQQ 20-day moving average. So that's quite straightforward, isn't it? When you realize that there is a very strong support here. Magenta isn't forming any liquidity. You don't see it forming. And so there is truly no reason to short this. So when you see QQQ 20-day moving average, I saw this head and shoulder inverse, head and shoulder pattern here. But it was still pretty risky trade to take, especially in the early candles or without a strong, clear structure. But if you got ready for the Qs as a support, this would have been quite an easy trade for you in the morning with the orange algorithm buying straight up right there, which we already identified in the early candles here. So yeah, but otherwise, do wait, because you see magenta was still, especially with this big red here. Yeah. So you do see there is certain limit to the risk to rewards here. And this was also when we identified the pink algorithm. And as you know, later in the day, the pink algorithm came in really clutch and was a big part of much of my profits today. So understanding this, you don't always have to rush to trade. right? If you see a clearer structure, sometimes the market is much kinder. In this case, it was a little choppy. Well, if you put it in perspective, this is less than 1 point. So you don't always have to trade if you don't see any structure here. Don't always force a trade. Now, it was only until here that we saw the pink and the teal algorithm starting to build more liquidity. Now, this would have been a possible trade here, especially once we broke out of the teal and you notice that yellow 646. That was quite an important candle here on the retrace. Now, if you have taken this, you would have seen that orange had somewhat of a breakout, but we were restricted thereafter with the magenta here, right? You saw that. And so if you had runners, sure, you could leave your runners up to here, and then cut it once it broke out of that magenta, which is the same level as when we broke to the top of the magenta, isn't it? So sometimes leave smaller runners, especially if the continuation structure is not there. And that's a beautiful trade there if you manage to take it, but not that lucrative. So that's fine, because you saw pink already in action and you would be prepared for later when it comes in again. Now, thereafter you saw that there is no buying continuation, isn't it? And understanding buying continuation is quite important. I talked about this. If the bulls were already building liquidity, trying to push out of this, and they pushed out of it from orange initially, but it started tapering into that magenta, this shows you that the buying strength is limited. So there's two things that the bulls can do. First is to rebuild more liquidity using the teal and the pink, which it tried. So this was pretty good. This was a pretty good re-entry, especially once we bounced off that pink algorithm. And you see the orange back to work again. But once again, we failed to break out. So in this case, at this same price level here, you see that the bulls have tried and have failed. So this is a failed buying continuation. And this is when you see that the magenta starting to rebuild liquidity here. This would have been a good zombie trade, right? So you would have prepared for the zombie trade here, but I would be more careful with this, because once it's sold in that teal, yes, but this was when I thought it will be great to catch a trade. Once it broke from the green, from the teal, you see the strength of that selling starting to increase, and this would have been a good zombie trade here, right? Some of you caught this short, or some of you were preparing to short this because it started retesting that magenta, isn't it? Now you notice that the liquidity is not quite even, and so this is why I always tell you, wait for the inverse cup to close, because if the market wants to grab this early liquidity, it will. And you will see magenta coming in again and grabbing the liquidity where the price range is, head and shoulder pattern. So understanding this, you will not try to catch trades again prematurely. And I talked about a very important concept here on the breakout. Once it broken out here, you need to see, right? We already saw the strong selling. The strong selling was already evident. So if this wants to head down, you will see this going down like that, or a certain retracement with that magenta grabbing more liquidity at that right shoulder. So we don't see that. Right? And we saw that it was teal that's in control. So this was when I instructed you to wait for the breakout. And if the sellers are truly intent on bringing this down, retrace it back, maybe near the teal and the magenta, and you will see green heading down. If you took your entries here from the puts, can you see how tight your stop loss can be? Because of the magenta and the teal, you can literally be penny perfect on your risks, on your stop loss, and potentially great rewards if it starts selling in that green. So this would have been a great entry if it happened, but it didn't. So you understand that instead of trying to force the trade right here. Understanding who is selling and who is attempting to grab the liquidity and the breakout is very important. And so now it's a thought experiment, isn't it? If this is not heading down and it's selling in green, so this selling is known as a controlled selling. So who's controlling the selling? The bulls. And this is why I told you we saw that beautiful liquidity here already, isn't it? So look out for that, especially once we regrab the pink. And exactly as it happened, and I showed you this in the daily videos. Grab the liquidity here, and you notice liquidity has to be grabbed from a nested right shoulder here. Now, where is a good entry here? You saw the rebound here. A good entry to me would be when we start capturing this, re-entering into the pink. Now, this would give me a few options here for my stop losses. First will be obviously 646, and the second will be where the magenta will start buying. So you see, I have some good stop loss. I would have prepared for this trade right there. I can't remember exactly when was my entry. I think it was somewhere here, right? Because I understood that this could be that inverse head and shoulder pattern, nested right shoulder here, to attempt to grab the liquidity here. And so once we started wedging here, now this wedge makes more sense now once you have the larger context, and that is the nested right shoulder. So this wedge, you know, is an upward trending wedge. Now the difficulty here is, as I mentioned, this magenta started buying, but I have to be prepared, isn't it? So you have to protect your trade and allow it to trend in that magenta, because if it's not selling, it's probably building liquidity on the breakout here. There is a bigger context here, which I talked about that in the 30-minute chart, right? We closed the cup, and so we were waiting for the handle, and this was the handle here. This was the handle. This particular structure here was the handle to break us out into a new high. And so if there is a squeeze, they will have to control and break out, right? They're soaking up all the sellers here so that they can break out here. So we do get a breakout here, right? But we lacked the continuation. You notice you lacked the continuation again. And this became very important because I saw that pink was rebuilding liquidity. You saw pink rebuilding liquidity. You know that the bulls may want to reattempt to soak up all the sellers again. And I noticed as well that the teal was starting to build liquidity too. Now, once this happened, this would have been a beautiful zombie trade, as I showed you. Beautiful zombie trade. Now, if you were also taking magenta here, this would have been a beautiful magenta break at the start. So this zombie here on the break of magenta with pink as your stop loss, you have a guiding precision algorithm here with that teal, and we had an extra bonus once we broke down. So this is a great bonus. Absolutely beautiful, because we broke that particular magenta as well, grabbing the liquidity here. But you must remember, this is a zombie trade, as I was telling you. This is what bulls and bears want. Bears want to sell this, obviously, and bulls want to control the selling so they can re-grab this liquidity. And therefore, you see two trades in one from this. And if you manage to catch this trade, this would have been absolutely beautiful, right? So you realize that there are certain nuances here. And do try to study my choice of stops. You realize, I'm sorry, I meant my choice of my strikes here, especially near the end of the day. You realize I will always choose something maybe within half a point strike range. It's good price, and you have very good risk to rewards, because potentially, right, if I wasn't wrong, I think I got this at 295, my puts here, the price, and I closed it around 1130, I think. So you see it's 400%, and that's understanding that the strike, by the time I got to this level, it would have already doubled in price, because I've already entered into the money. And everything else, because of a higher delta, your increase is higher, because your delta is, well, basically for every price increase. So let's say this delta is 0.3. So every time SPY goes by 1 point, I would have, well, increased my contract price by, well, technically 30 cents, but because this is SPX, it's $3. So you understand that the delta is quite important. So understanding where are you in the money and how you get into the money is very important. Now, for this zombie trade, I wanted to have it at least maybe to this point here. right, to get in the money. And once I got in the money, this would have doubled my money here. 295, I was expecting $6 right here. And it went to 11. That's fine. That's a great bonus. So when you understand your risk to rewards, when you understand delta, when you understand your expected move, you're able to understand how it can get to 100%, how it can increase more than 100%. So if you wanted to take puts here, for example, you cannot be taking low of day. You can't be taking your strikes at low of day because this is extremely unrealistic. So this move, even this move, will not increase your contract value by much, especially near to end of day. So you have to understand your choice of your strikes and understand the structure. And when you put them together, you will have very good risk to rewards. I will talk more about that in future. But in the meantime, do study my trades, understand how I use them together with the structure. And most importantly, the choice of your strikes are very important, especially near end of day. And I think you've already seen a few examples that I've made. So keep studying. You realize it's always about within 1 to 2 strike range and understanding the structure and the expected move of the structure with understanding of that precision algorithm on how it's going to bring us there. So understanding this teal algorithm there, I would have confidence that it can get to my strike range pretty quickly. So, and of course the dump, right, at the end. If it never threatened the magenta and I added a blue algorithm as well, right, it's never going down. You saw how the market has defended that 646 yellow. So it's never going down until at least we have a negative catalyst here. And you see that even after hours, it started going back up. So quite straightforward there. Please not only study the structure and the algorithms, understanding the thought process behind this, most importantly, where to place your stops, where to enter a trade, and choice of your strikes as well. Plenty of profits to be found. From Thursday, let's take a look. As we start the day today, right, you notice that the orange was building liquidity. This one, very difficult to catch the trade unless you were able to catch it with the green precision algorithm right there. I wouldn't catch this. Just be more patient because at this point here, once we started retesting all the way to the 5-day moving average, it became a little clearer, right? We talked about this teal. We identified this teal that started pushing up. You saw that beautiful head and shoulder pattern from the teal here. Now, don't forget to review all the analysis day after day, and more importantly, try to catch up from the minute to minute as I was explaining it in parallel as you study this video here. So understanding this teal was important, right? Because you saw that teal forming, and I mentioned about this pink that started forming here. Now, throughout this entire week, you have understood the concept of dual algorithms, and you see it at play here for the bulls now, right? The bulls required more strength from a stronger algorithm, in this case, the pink. Now, this is what I was mentioning about in that pink algorithm comment here. Let's see. This one. Bulls, we need the pink algorithm, right? You understand that, and this is just a concept of the dual algorithms, but in this case, you see it in the implementation for the bulls, right? We have been talking about dual algorithms, but mostly for bears, head and shoulders, but you see it here for that inverse head and shoulder pattern here. Now, sometimes we do get a nested shoulder, right, with the pink and the teal here like that. This will be great too. Yeah, this will be better. But you sometimes also see that we don't get such luxuries because it's already building a lot of strength here with the dual algorithms, right? So understanding the dual algorithms, especially when you already see pink in control, you just have to be very careful to short this. And at this point in time, if I'm not wrong, I also identified the magenta And you see we are nowhere near the magenta. You don't see magenta actually building volume. So you see how orange became a buying continuation instead of a controlled algorithm for the bears. You understand that? Now thereafter we started grabbing liquidity from the magenta, isn't it? So this was great. This was great here. Now I want to talk about a red trade here that I took. I took it call here, if I'm not wrong. And I was able, I think I opened it at 380. Let's take a look at the trade. Let's see, my red trade. That should be, sorry, let me just find it here. Yeah, right here. So that's a 6490 call, 380. I opened it at 380. So 6490 call, I opened it at 380. I think about here, $3.80. Right, remember this particular trade. My problem here was I didn't protect it. I got it right. I could have protected it at 550 right here. Now, the problem with this trade is when I checked back after it broke out here, the contract value was still at 550 here and here. You see the problem with that? So sometimes when you're holding a strike that is slightly far away, and if I'm not wrong, this was about, let's see, this was just 0.3 delta. It's a 3 delta trade. And I can't even extract the full volume from this. So you have to understand sometimes when you're trading 0 day to expiry, what you want to be looking out for is the strongest precision algorithm. If it chops up like that, you're actually all right to leave it. You can leave smaller runners, sure, because we don't know how strong the buying will be, isn't it? So you leave a small runner and you find out for yourself. And if it comes to a point that it doesn't fulfill your risk to rewards, you close it. You have the choice and you don't have the stress because you already protected it. So how should I have traded that? I should have just protected my trade and just allow a small runner to go up in that orange. And you see how beautiful that is. Maybe I could be wrong, maybe a little higher here, but the last I checked it was 550 right here just before the breakout. And this was when we identified the magenta and the orange algorithm right here. Now you see actually a magenta that was building liquidity here. Do you see that? If you chart it more diligently, because we already have identified the magenta, you would see the starter position to grab that magenta liquidity here, right to the penny. So this magenta, although it doesn't seem so significant at the start, it actually is extremely important because it started grabbing the liquidity from magenta. Now this was when we could identify a stronger selling algorithm right there. And if we do not continue in that, you have to be very careful about shorting this, because I always mentioned this is a support. You cannot be shorting at support. You have to understand where to be looking out for that resistance to short this. So either we continue to build more liquidity in that orange and you will see something like that, right? And we continue heading down, or you wait for the breakout and the retrace. And you will see also the orange and the magenta starting to build more liquidity to retest. Or because we have retested the 5-day moving average, wait for the cups to close. It will be so much clearer then, especially with 5 days, some sort of resistance if this wants to truly head down. And what are you missing out from? You're missing out only 0.5 points here to here. Can you afford to wait instead of taking puts at the support level here? Absolutely, isn't it? And at this point here, I talked about how the pink, right? And this was also when we closed the cup at that 647. This was very important information. And all you had to do was to see if this probably is the handle from the cup that's starting to form. And quite clearly, you see it here. Now, there is this concept that I talked about, the scatter plot, and you see it here happening again, right? So do search scatter plot. Let's see, scatter plot, yeah, from SPY day trading. Yep, okay, I talked about this here, right? Talking about scatter plot. So just search this, you will see it much more clearly. Now, The scatter plot here, quite simply, you understand what to be looking out for. You see that it is the teal that is building liquidity here. Now, this was also my entry here. I talked about this in a YouTube video for the day, talking about how I changed an 80% trade into an 850% trade because of understanding your stops and your risk to rewards. So please watch that video. You will have a better understanding there. And you see how the teal was starting to build more liquidity here. Close the cup, you see the handle forming, isn't it? Absolutely beautiful in that orange buying continuation. Now, if you missed that, there are several microstructures. Now, microstructures like that are extremely dangerous. You have to be careful because we're in the middle of the algorithm right there, unless you can chart very precisely. Yeah, sometimes it's precise, yes, because it's a choppy and slow day, but sometimes it isn't. So you just have to be very careful if you're attempting to take this breakout here and it retrace back to that yellow 647. Sometimes we have, yes, the market is kind, we get perfect levels. Now, horizontal levels, it's much harder to get it perfect compared to the algorithms because buying, well, believe it or not, buying and selling happens with the algorithms here and not always with levels. So this is dangerous. This one is better because you have taken a call on the red candles. So this, you would have better slippage. This, you will have better means to protect your trade, because if I took it off the yellow here, I would have protected it by then. And this would have been a protected trade all the way up, allowing the runners to head up, or whenever I choose to take profits at my comfort level. So understanding this quite important, right? At this point, you do also see that the pink was rebuilding liquidity. So another entry here and here, if you wanted to take the move up. Now, very importantly, I want you to see if there's any bearish liquidity here. You see magenta buying up. So at any point in time, so let's say at this point in time, right? This could be the liquidity for it to head down. At this point in time, here, at this point in time, this would be the liquidity for this to head down, right? And at this point in time, this could be the liquidity for it to head down. But once we started retesting and going up, grinding up here, you notice that they are just trying to kill both the lower delta calls and the puts at this level, because you don't see clear liquidity for the bears. Where is the liquidity? The liquidity is actually here. So once we miss this window here, they're just left to die here. And you see how it truly left to die, because this point here is only maybe 0.7, 0.5 to 0.7. As long as it's not within 2 strike price, which is about 1 point on SPY, yeah, they will expire so much options here. I talked about this before. If they chop within 0.5 to 0.7 right here, they will kill all the strikes above and below. This is what they do, especially once you already see a slow grind that's happening. You don't see clear liquidity for the dump. Maybe here, but we barely even tested that. So you see the liquidity and how it's important for you to plan your approach. So if you want to be shorting this, right, if you have this desire to short this, you must learn to identify liquidity and set alerts, especially if we are grinding up like that.